Benchmark indices flat as IndusInd Bank, HUL fall. Coal India, Kotak Bank, Power Grid emerge as top gainers. Sectoral action mixed. Media comes out as the top sectoral gainer. On the other hand, FMCG and Realty are the top losers. Kotak Mahindra Bank gains 4% even as Q3 net profit misses estimates. Net interest income grows 16% to 6553 crore rupees, while net profit is up 7% year over year. Reliance Industries Q3 net revenue and profit declines on refinery shutdown, misses analyst estimates. And HUL falls as the company's third quarter results miss analyst estimates. Net profit rises 1.1%, while revenue declines 0.2%. Good afternoon, welcome. You're watching Market IQ on NDTV Profit. It's a day where markets are super sanguine and it's an extremely tight band in which we are trading. Let me quickly take it to where the Nifty 50 is currently at, around 0.1% of gains. We are largely in the green, but you're seeing markets trade in quite a tight band nonetheless. Let's quickly go on to some of the key players which are buzzing in trade, and within that you're seeing the likes of a Kotak Mahindra Bank, which is up 3.5+%. Good set of numbers coming in from Kotak, and that's leading the stock higher as we speak. You're seeing outside of that the likes of a Coal India up roughly 4%, Power Grid 1.5% higher, Britannia also with gains of around 1/3%. Among the losers, what we are seeing is HUL is down 3% on the back of those weakish numbers that have come through. But then you're seeing TCS down 1.5%. IndusInd continues its slide for a second consecutive day. You're seeing M&M also down 1.3%. And then you have the FMCG pack, which is in focus largely because of HUL's numbers. On to news with regard to where we are on the broader markets. Nifty mid-cap and small-cap definitely performing much better than the benchmark. You're seeing 0.2% of gains on the Nifty mid-cap. You also have around 0.5% higher on the Nifty small-cap. So those indices doing quite well. Let's quickly have the advanced decline ratio to get more perspective on what's happening there. But while we are at it, we'll also look at where the sectoral indices are doing. There you go. The advanced decline ratio largely in 1:1 in favor of the advances a wee bit. But outside of that, you're seeing a fairly sanguine day. In terms of where sectoral indices are at, Nifty, IT, FMCG, no surprises there. In fact, Realty is a bit of a surprise there in the loser basket. While PSE gains for a second consecutive day, you're seeing Media, Energy, both post gains along with Nifty Bank. If we can have the constituents of the Nifty Bank, because you have focus on both Kotak Mahindra Bank as well as ICICI Bank, both of who will be declaring results. You also have outside of this pack, you have the likes of a Union Bank, which will come out with numbers. But you see top of the pack there, Kotak Mahindra Bank, up 3.1% in trade. But we'll stick with Kotak Mahindra Bank. They've just declared their Q3 numbers. And we'll try to break down those numbers a little bit more. We have with us Pragati, who's going to give us a complete picture of what's happening. Pragati.
Hi Harsh, thanks so much for giving it to me. Yes, Kotak Mahindra Bank has just come out with its third quarter numbers, and contrary to what has been the pattern of the bank over the last couple of quarters, this time the net profit, which is up about 7.6%, it has missed some of the analyst estimates, because analysts were estimating about a 13% rise in the net profit of the bank, but it has increased just about 7.6%. So if you have to see the standalone numbers, the net profit is up, as I mentioned, 7.6% to 3,005 crore rupees, as against the estimate of 3,100 crore rupees. The net interest income, however, is up about 16%, and the other income is up 17.8%. So if we can see, if we have to draw a conclusion, the profit is up 7.6% on higher other income and not on the core income of the bank. The asset quality, once again, is largely flat. We are not seeing much improvement or worsening on that front. The gross NPAs are at 1.73%, which is like up of like 1 bp, so we can say it's largely flat. The net NPA ratio has improved slightly, up 3 bips to 0.34% quarter on quarter. The net interest margin, again, no big improvement, but there's not even any compression. It's flat at 5.22%, which is unlike, because other banks are seeing compression in the margins, and Kotak Mahindra Bank has largely been able to maintain that level, if not improved or worsened. Provisions, now that is one number, Harsh, we are definitely looking at, because provisions are seeing a sharp rise. They're up threefold to 579 crore on a yearly basis. And the bank has explained, at least in its numbers, that they have provided for 190 crore against the alternate investment fund and 65 crore against the securities. Now that is, provision is one number that we are seeing because they are sharply up. If you have to look at the advances are up 19%, but the deposits are up about 4% year on year. CASA ratio once again is seeing a compression of 60 bips quarter on quarter, which is about 47.7% for the quarter. That's a quick wrap for you on the numbers. We'll bring you more updates as we have them.
Right, thanks so much for that, Pragati. Two numbers standing out for me in that pack is your net interest margin at 5.22%, holding up fairly well, and your 19% growth number. But we'll switch focus. ICICI Bank will also be in focus. Mind you, 7% of the Nifty, ICICI Bank alone. And of course, December quarter numbers, we'll continue to focus on that. Profit as well as NII are expected to improve. Vishy is here with all of what to expect. Vishy, take it away.
So ICICI for the third quarter is expected to report about 9,950 odd crore worth of net profit. This is going to be about 20% higher year on year. Similarly, on the net interest income side, the growth is expected to be about close to 9.2 odd percent, with NII coming at 17,979 crore. This is expected to be, of course, lower than what ICICI Bank is used to on a quarterly basis, simply because the deposit costs would have gone up likely in the third quarter, which will bring down that NII. And primarily because of that, you will also see some impact on the net interest margin. Having said that, the management did guide during the second quarter results that the NIM contraction will be slower than before, simply because the bank has completed most of the repricing of deposits in the previous quarters. In the current quarter, some of it is left, which will start playing out during the quarter. The advances growth is expected to be strong during this quarter. Remember, in September 30, the bank reported about 11 lakh crore worth of advances. On the deposit front, the deposits stood at 12.913 lakh crore roughly for ICICI Bank. So on the advances side, you will see a strong growth. Deposit side, we need to watch out, especially what happens with that CASA bulk sort of addition of those numbers, where they stand during the third quarter. That will also be a key monitorable. On the asset quality front, of course, ICICI Bank has not had trouble for a very long time. Gross NPA ratio was about 2.48% as of 30th September. That's estimated to be coming down during the third quarter.
Right, thanks for that, Vishy. The other one in focus, I'm going to quickly move on. HUL announced third quarter numbers. It's the key drag on indices, at least on the benchmarks today. And we saw third quarter results being largely muted. I want to bring in Sesa, who's going to give us a roundup of how the numbers disappointed the street and what's really disappointing within the set of numbers.
Right, so the street had largely expected the company to report a weak set of numbers, and there was not a single surprise in the reported numbers. Profit missed estimates and revenue declined marginally, mainly on account of the price hikes, the price cuts rather. The company has taken, to pass on the benefits of the commodity deflation. Now, what is interesting is the management did not share any outlook on the volume growth, but said that the pace of recovery from here on would be determined by a rebound in rural income and winter crop yields. So going forward, that remains a key monitorable, the volume growth outlook, and also reinforcing general trade mode is now an added pressure with changes in distribution margin structure. Management also sees the price growth to be marginally negative moving ahead if the commodity prices remain at the current levels. In the longer term, however, the company expects to see 4 to 5% pricing growth. We have already seen the stock react to that. It has fallen 3% after several brokerages have actually slashed the earnings per share estimate for HUL for FY24 and 25, and they have also lowered the price target.
Right. Thank you so much for that, Sesa. Let me quickly move on. We'll continue to focus on a whole hog of earnings that have come through. It's been an earnings-heavy week. We'll focus now in on Reliance. Net profit and revenue both declined. They've missed analyst estimates. Numbers were impacted by major shutdowns undertaken in the refineries division of the O2C business. And as per the company, that shutdown is what really impacted the O2C division. Now, we have with us Vikas Srivastav, who's joining in with the key highlights of the quarter. Over to you, Vikas.
Right, Hersh. As you rightly said, one of the major factors was the refinery shutdown. But the other factors which were impacted were also the lower price realization during the quarter on product sales. So overall, the exports have also come down. The crude oil prices have almost fallen down by 5%, 5.3% year on year, which impacted the company's overall profitability. So one was that. The other is that if we look at on year basis, the company has done well. So some of the major boosters were performance of sales from the telecom business, the retail business, as well as their oil and gas business. So telecom, although the average revenue per user has been flat as 181.7 rupees, same as previous quarter, but the net subscriber addition has been much higher. The data usage has also increased, and the company has managed to get more subscriber through its Jio Air Fiber, other than the fixed line broadband services that they were providing Jio Fiber earlier. As far as their retail business is concerned, they have done extremely well because of the festive season. The footfalls have increased across all their formats. So that is one, and also the oil to gas business has done well because of higher production. Back to you, Hersh.
Right. Thanks so much for that, Vikas. A comprehensive piece on what's going on with regard to Reliance's Q3 numbers. But, we'll stick with earnings. Hindustan Zinc's revenue has fallen compared to last year on the back of lower zinc prices. EBITDA and profit also has come in lower, but they've improved sequentially. We spoke to the CEO, Arun Mishra, about why the company is not revising its margin guidance for the year. Listen into a slice of that.
We are not revising the guidance simply because the fumer, although commissioned, it is going through the teething issues and all that. So we feel that fumer will be fully stabilized and will start operating at the rate of producing 30 tons of silver per annum by this Q4. So we will get maybe a benefit of maybe 5 or 6 tons of additional silver this quarter. But going forward next year, we'll get the full benefit of additional 30 tons of silver. If that becomes so, then whatever number we close at this year, we will add another 30 tons to it. Now the silver, the way the costing is done, it will remain low. The revenue, it depends upon the price of silver. So I hope the silver being very sought after metal in India as well. So the prices will continue to be moving northwards even next year. So hopefully, and the whole global focus on renewable power, solar energy will push up the price of silver in the coming days as well.
Right. That time of the show where we slip into a quick break. More on the other side. Stay tuned to NDTV Profit. Welcome back. You're watching Market IQ on NDTV Profit. Now, HFCL is one of the companies in focus in today's trade. You're seeing the stock buzzing on the back of strong, in fact, a single order win that's come through. It's reached an intraday high of more than 12%. Anushi is here breaking down details with regard to the order win, what it entails. Anushi, talk to us about what this means.
Right. So HFCL is in focus. The stock has surged more than 12% in today's trading session after it won an order worth rupees 623 crore for the supply of 5G telecom networking equipment. Now, this order is to be executed by December 2024 for this year. But not only that, Harsh, apart from that, there was another order win which was quite strong in the Jan month itself, which included about an order win of about 1100 crore from BSNL. So that is the whole order win for the Jan month. But if you look at the order book status, that stands at about 7,788 crore. As of September 30th. Other than that, the company has also increasing its funds through a QIP fundraise, in which they had raised about 352 crore to fund its capex requirements for expanding its optical fiber cable capacity and to reduce its short-term borrowings as well. So let's keep the stock in focus. The stock has surged over 38% in the past year itself and about 13.8% in the 1 week period. So this is all on HFCL.
Absolutely. Thank you so much for that, Anushi. Just to kind of give a little bit of more perspective here, you're seeing that the revenue or the top line of this company is roughly 4,700 odd crore at the end of FY23. It's got an order book at the end of Q2 of around 7,000 crore, and add 1,700 crore to that, which is the order win post that, or rather in the month of January alone, you get 9,000 plus crore. So you have a good visibility, and therefore stock is up and away 11.5% higher in trade as we speak. But the other one that is in focus, you have the likes of an Ultratech. A company reported December numbers. You're seeing a bit of a muted kind of a performance in trade today. You're seeing it down around 0.7%. But what we have Mihika with us talking to us about what's the rationale of why the muted earnings that the company reported. Talk to us, Mihika.
Yes. So Ultratech Q3 earnings were largely in line with the estimates. Revenue are up around 7.9%, and this was due to the price hikes that took place pan-India, which led to better realizations. EBITDA did rise for almost 40% year-on-year, and this was mainly on the back of the lower fuel costs. Key raw material costs have, the prices have fallen down around 30 to 40% year-on-year. Margins also did improve to 19.5% versus 15%, and the net profit was also up 67% year-on-year. We also have some brokerages. First, we have Motilal Oswal, which has maintained its buy rating at a target price of 12,000 rupees. Now, this implies a 19% upside to the last closing price. They highlighted some of the management commentary where management is optimistic about the demand prospects, and they also expect their capacity utilization to improve to 80 to 85% in Q4 itself versus 77% in Q3. They're also optimistic about the demand which is going to slide up gradually in most markets, especially the north region. And they also stated their FY24-25 capex at 9,000 crores on the back of capacity expansion plans. And then we have a City on Ultratech Cement, which has maintained a buy rating at a target price of 11,700. The hybrid coal costs, City expects them to fall around 7 to 8% over the next 6 months, which is a positive for the company. They also estimate a 12% volume growth over FY23 to FY26, and they're also talking about the third capacity expansion phase, which will add around 21.9 million tons per annum capacity for the company, and that's why they are estimating a capacity CAGR of over 10% from FY24 to FY27. The brokerage lastly also highlighted that the company will acquire Kesoram's cement business via shares and a debt takeover, and this has been approved by the NCLT. And lastly, they revised the FY24, FY25 consolidated EBITDA estimates by little lower by 5% and 1% respectively.
Perfect. Thank you so much for that, Mihika. One of the other ones which are also buzzing in trade is Paytm. Company's third quarter loss has narrowed, so that's come in slightly better. And what you're seeing though is that EBITDA has not gone up as much as most analysts on the street were expecting. But Rishabh is here with a wrap on all the numbers as well as some amount of management commentary as well. Rishabh, take it away.
That's right. We have early reports coming in basis the Paytm Q3 numbers. That was the numbers that beat estimates, Bloomberg's consensus estimates. The most important one coming in right now is CLSA. They have upgraded the stock from an outperform to a buy, as well as the target price on the stock has been raised from about 925 rupees a piece to about 960 rupees a piece. CLSA said that the core EBITDA revenue that Paytm posted of about 220 crores was ahead of their 160 crore estimate, so big beat there. They added that though there was a miss on the payments net revenue estimate that they put out, there was a modest beat on the lending revenue, as well as some beat on the other revenue that Paytm posts as part of its marketing revenue. There was some beat on the operating expenditure there, as well as the focus on cost reduction and employee expenses remained flat. So that is something CLSA is bullish on. The fact that the bulk of the BNPL business loss that there was offset by newer revenue streams, as well as the cost reductions that Paytm did. Remember, Paytm in December, they laid off quite a few employees, about 1,000, all to save about 10 to 15% in employee costs. And in that place, they put AI, decided AI as the major reason for those layoffs. We're also seeing a report coming from Daulat. They have maintained their positive view and their target price of about 1,320 rupees a piece, which is a little higher than what other analysts put their target price at. They also said that Paytm's Q3 performance was better than expected, but they will be seeking additional clarity on growth avenues in the backdrop of moderated postpaid business growth. And also a way forward on the financial services business, so insurance, loans, as well as the equity broking business that Paytm has entered. There will be more reports coming in throughout the day after the Paytm con call is done, which is scheduled for later today.
Perfect. Thanks so much for that, Rishabh. But that's all the time we have on Market IQ for today. It's been a packed day in terms of earnings. Keep a lookout for all of those stocks which are buzzing on the back of earnings. And stay tuned to NDTV Profit. We'll continue to bring you the latest.
Hi, thanks so much for joining in. This is the Mutual Fund Show on NDTV Profit, and I'm Alex Matthew. Often in the construction of your investment portfolio, a lot of attention goes towards choosing the right equity mutual funds, and not enough attention is paid to fixed income. The thing is, you can use a fixed income portfolio very effectively, not just to meet your shorter term goals, but also in asset allocation strategy. And in certain situations, you can make a tactical allocation to make significant capital gains. That is what we're going to be talking about on today's program. We'll first talk about the current context, and then we'll move to strategy. My first guest is Pankaj Pathak, Fund Manager and Fixed Income at Quantum AMC. Thank you so much, Pankaj, for taking the time. Let's set the context for everybody that's tuning in. There's a lot that is happening in the bond markets globally. So as a fund manager, what are the key triggers that you're focusing on, not just in India, but on the global stage?
Thank you, Alex. Thank you for having me. So first of all, last 2 years, or I would say 3 years, have been difficult for the fixed income market globally, especially given the inflation, which has spiked after COVID, and there all this geopolitical situation where there's been war between big commodity exporters. And what we saw that globally central banks were hiking interest rates. India too had an inflation of its own, and RBI was also hiking interest rate till early part of last year. So last rate hike was in February. So overall, 2022 was very bad. 23, we had a decent year despite all the negative news flows, negative developments on the macro front. But now